Hey, good evening, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, July 25th, and I apologize. Today's after hours, and having a little bit of computer issues and having to use another computer to complete this for the day. So these are after hours, so we'll just jump right into the economic news releases. We do got two of them today that are important. The first one, of course, is the weekly jobless claims that we to report every week, every Thursday. We had 336,000 people applying for unemployment last week. The projection for this week came at 342, and it came in at 343. So right about where the forecast came at. And then we also had the durable goods orders for the month of June. So back in May, they actually revised it. It was at 3.7 initially claimed, and then it jumped up. They revised it to 5.2. So pretty big number there. So as a result, they were supposed to pull back to about, the forecast was supposed to be about 2.3. So it was supposed to just come down a little bit, and it came down. It did come down a little bit, but 4.2 is still higher than what the forecasts were. So, but if you exclude the big ticket items, it did come down a little bit. So still decent numbers for exclusion of the durable goods. So as a result, some of the investors are thinking of maybe increase their forecast for the Q3 GDP from maybe 1% to about 2.4%. So look at those numbers. Those could be forecasts that you see for GDP numbers for Q3. But again, we'll have to kind of wait and see. A lot of it, of course, could be played apart with real estate, as we've been kind of seeing a slowdown here in the second quarter. So let's go ahead and take a look at the headline news. And across the board, the stock market went up. Of course, the big headline today was Facebook coming up with great numbers. But also to note, being on the real estate side of things, the couple of the home builders reported earnings a little less, and as a result of the higher interest rates slowing their sales. So again, keep an eye on the GDP, especially Q3. With the slowdown of home purchases because of the higher interest rates, we'll have to kind of wait and see if that really transpires. So speaking of such, let's go ahead and take a look at the bond market, see what interest rates are doing. As you can see, we kind of had tiptoed back and forth. We were actually down testing the floor, as you can see by the wick down below, but the green means it improved when we kind of came up towards the 10-day moving average, which helped us, and we're now kind of touching on the ceiling. We did have a nice improvement, approximately about 18 basis points. So by the end of the day, we end up having a improvement in the market. As you can see, most of the day was actually lower. So nice to see that we had finished up the day kind of strong. So it will be interesting to see what tomorrow brings. If we can maybe finish closing that gap that what happened on Wednesday or Thursday. So when we open up, Tuesday, Wednesday. So when we had that opening gap, about 50 basis points yesterday, we're hoping that maybe that will get closed up here shortly here. All right, so nice improvement in the interest rates. Stay tuned. We do got more economic news tomorrow, Friday. It will be I'll be presenting it a little late again tomorrow, as I don't have my computer back being worked on, and I'll have to use this other computer here. All right, thanks again for watching. You guys have a wonderful day, and we'll see you guys Friday.